Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. We are at the cusp of first quarter earnings, and some of the finest performances in the financial quarter gone by have come in from mid-cap companies, in particular Persistent Systems, where you've seen an exceptional growth in net profit, up 39% year on year at 425 crores, and sales are up 22% at 3,334 crore rupees. In addition, the company has come up with a very, very strong performance in EBIT, in net profit margin, and of course, in client concentration. We are now joined by Mr. Sandeep Kalra, ED and CEO at Persistent. Namaste to you, Mr. Kalra. I'd just like to know, on behalf of our viewers, what was the cause and the reasons behind this spectacular rise in net profit and sales for the quarter gone by?
So good morning and happy to be here. So if you look at our last quarter, let me just summarize and that will also lead to the answer. So in the last quarter, we saw a revenue of 389.7 million. This is a growth in dollar terms at 3.9% quarter on quarter, 18.8% year on year. And as you rightly said before, it's 21.8% year on year. Please remember, this is the 21st sequential quarter of growth for us. So it's been built on many quarters of growth. The EBIT, as you rightly said, was at 34.8% year on year. Now, if you look at it, our total contract value, the order book for the quarter came in at $520.8 million, which bodes very well for us. In terms of the growth, we saw a very healthy growth across all our customer segments. So whether you look at our top 5 customers growing at 22.8%, top 10 at 20.2%, and even if you were to look at our top 100 customers, which are responsible for roughly 80% plus of our revenues, they grew at 22.4%. So we have had a very good secular increase in revenue across various segments. Now, in terms of the verticals and the geographies, let me talk about that as well. So the growth was led by banking financial services vertical, growing by 30.7% year on year, high tech by about 14.1%, and healthcare at 12.4%. So even in terms of the verticals, we had a very good growth across all the verticals. In terms of geographies, Europe, it's a very small base for us. It's about 9% of our revenues or thereabouts. We grew at 37% plus year on year. North America, which is the largest market for us, contributing 80% plus, that grew at about 17.4%. So overall, whether it is the verticals, whether it is the geographies or the client segments, we saw a very good secular growth across. So I'll take a pause and answer more questions.
Okay, ladies and gentlemen, one must note the consistency of performance in Persistent. The name itself talks about persistency. Let me just give you some excellent data. Sequential growth in revenue, which means quarter on quarter, Persistent has shown rising revenue for the last 21 quarters. The company got listed in FY 2010, and from then on till FY 25, revenue has appreciated about 17.4% each year. More importantly, in the last 4 fiscal years, this growth in revenue has sharpened further at about 25.6% CAGR each year for the last 4 years. This is something that the market has appreciated very well. Each year over the last 5 years, you've seen the stock price of Persistent rise 73% each year, which means it's doubled each year. And of course, in the last 10 years, the CAGR growth in the stock price is at 33% each year. Mr. Kalra, let's look at what the next 3 quarters hold for shareholders. Where do you see traction in North America? What are the 1 or 2 sectors that Persistent is targeting in terms of higher sales, higher revenue, and maybe higher margin, higher profit?
Sure. So if we were to look at where we are today and the last 6 quarters, 7 quarters, we had a very good growth in healthcare. Healthcare had been leading the growth for us for the last year and a half. For the next 3 quarters, 4 quarters, the banking financial services segment, as we see it, will lead the growth for us. And that's reflected in the order book that we have had, the kind of growth we are seeing on a quarterly basis. Followed by that will be the high tech segment, where we are seeing the impact of the work that we are doing in AI at the highest clip. Because these are the companies that build software products. These are the first one to adopt AI to disrupt themselves, and then it percolates to the enterprises. So high tech segment is the second growth segment for us, and healthcare any which ways is a very strong segment for us. It will continue to grow, but that will be the pecking order that we are looking at from what we know today. And as we don't give any forward-looking guidance, I'll not put a number to it. But all I can say is, if you look at our order book, if you look at our employee addition, we also added 700 plus employees in this quarter. This was on a sequential basis, and the last quarter also we had added 600 plus employees. So from that perspective, order book is good, the employee addition is good, we have good traction in the market. Balance will let the quarters pan out.
Okay. Mr. Kalra, what is the size of the order book and what was the addition in the quarter gone by in Q1?
So the order book for the quarter came in at 500 plus $1 million in TCV terms. So on an every quarter basis, we announce these TCVs. These are a combination of both new business as well as the business that we do on a renewal basis. So from that perspective, out of the $520 million, the total contract value of new bookings was $337 million, and these are orders that span over the years. The annual contract value, which is the next 12 months realizable value of this, is 385 million from this quarter. Obviously all of the quarterly things add up, and the ACV new in this quarter itself was about $211.8 million.
Okay. Another data point that I found very interesting was that the number of large clients which contribute more than 5% of annual revenue actually rose to 56 from the year ago number of about 41. So that's a very, very sharp uptick in large clients. Mr. Kalra, typically when you add a client and it goes beyond $5 million, are you addressing newer segments within the client? Or is the client deepening his relationship in the vertical that you are addressing him?
Yeah, so very good question. And so these are the number of customers who are greater than 5 million from a trailing 12-month perspective. So this is the actual realized value of revenue in the last 12 months. If you were to take the run rate, it may even be higher. Now, from that perspective, to your point, look, when we get into a customer, we may start by delivering one project or one, as we call, a service line. And so the whole thing is about, as you are building the relationship with the customer, you want to work with more of their business units, deliver more of your different kind of services. For example, if we are doing data related work, we want to maybe build software applications, or we want to do things around their cybersecurity, their infrastructure, their cloud programs, and so on. So we have seen wherever we have gotten to a customer, and usually as we do deliver work for them, we have been able to increase. And that's where, if you look at even our $1 million customers from the last year to this year, it's 178 to 191. If you look at the highest clip, which is the $75 million per year customers, that has also gone from 3 to 4. So it's been a healthy growth across customer segments by deepening our relationships with the customers.
Okay. Mr. Kalra, you are amongst the rare companies in the IT space which has actually added headcount. The last number that I see is somewhere 25,480, if I'm not wrong. This is up year on year by about 9%.
Yeah.
At the same time, attrition has risen to 13.9% from about 12% earlier. One is good and one is manageable. Now tell us what is the headcount addition that you see in the coming 3 quarters, and how would you want to comment upon falling headcount in companies larger than yourself in the software space?
Yeah. So from our perspective, if we look at it, there are two, three things that kind of contribute to the revenue growth. So when you're looking at a revenue growth, you're looking at how many people do you have? What is the impact of AI? Can you do more with less? And third, but not the least, it's basically how much are you able to utilize your manpower. So if you look at it, we run a very efficient operation. We have 88% plus of our engineering talent utilized at any point in time, and we have been able to bring in people in line with our demand. And we don't give the forward looking forecast, because that can be then coordinated or related to the revenue kind of a thing. But from our perspective, we have the ability to bring in people. We are very well known in the markets that we service. We have a very good employee value proposition. So from that perspective, we are confident of bringing in people as we need. And from the other people's perspective, look, it's about their operations, it's about their customers, it's about their revenue growth. So look, for us the revenue growth is strong, our ability to hire in line with that is strong. So I'll just leave it there.
Mr. Kalra, when one needs to address the elephant in the room, and that's artificial intelligence. Of course, it's helping you draw more client and more business. But what about this consistent and persistent fear that we are hearing that AI will result in falling numbers, job losses? How do you react to this?
Yeah. So look, it is always whenever there's a new technology that comes in, you have to adapt and adopt. You have to adapt to the changes and you have to adopt with open, mind the newer technology. If you are ahead of the curve, whether you are as an individual or as a company ahead of the curve than others, then you have nothing to fear. But if you kind of discount the impact of newer technologies, then obviously, you will lag in your career as an individual and as a company also, other companies will outcompete you. From our perspective, two things. One, as an industry, I think it's a very interesting pivot. India has been the software progress, the software powerhouse for the world. If we as a country, our universities, our companies, our government trains the people, I don't think there's much to worry. The market will also expand. While for the same work, you may need lesser number of people, lesser effort, but if the work expands, there's enough and more as long as we train ourselves ahead of the curve. The same tenets we are following at Persistent, we are trying to train ourselves, trying to adopt these technologies, create that talent pool in Persistent faster than our competition, whether it is our US based companies competition, European or our Indian heritage companies. And that's boding well in our results. And we are confident of delivering good results, whether the AI disruption happens big or small.
Okay. Mr. Kalra, the entire industry seems to be at the cusp of dramatic change. This is something that we had witnessed in the dot com, before the dot com bubble was the Y2K scenario. So, artificial intelligence, and of course, the way, these software have taken over our life is materially impacting the sector as such. How do you see the next 2, 3 years for yourself as also the wider software industry in managing this change? Are we going to have a leaner, meaner global IT industry out of India? Or are we going to see the death of body shopping?
So two, three parts. Number one, in this new era, it is going to be, absolutely understanding different technologies, different new players that are coming in. Size wise, I don't think, bigger is better. It is sometimes, the more bigger you are, the less wieldy your organization becomes, and it becomes very difficult to pivot the organization to the newer technology. So thankfully, people like us are still at a size where we are big enough to scale for a customer, but we are small enough to understand and pivot in the directions. So as long as companies big and small are able to train their manpower, they should be okay. As long as even, if you look at the US, it is not this that the market is not expanding. Even today, for example, your viewers, a lot of them may not have heard of ChatGPT, but a number of people are using ChatGPT on their phones. So that means something is that demand is going somewhere. Some other companies are also getting that money. So we have to just identify as an industry where the money is going, what are the skills required to fulfill that demand. As long as we train, I don't think it is a problem. But we can't sit tight and expect demand to come our way. We'll have to absolutely go out and train and look at that demand.
Okay. Mr. Kalra, my final question to you. How far has artificial intelligence in within Persistent grown over the last 1 year or so, either in catalyzing new business or maybe utilizing headcount better or maybe providing a better experience to clients?
Yeah. So there are two distinct parts to it. One is how we are using the AI part to develop platforms, capabilities, reusable IP to service our customers faster, better than our competition, aligning with companies like Microsoft, Amazon, Google, Salesforce, IBM, Databricks, Snowflakes, the key leaders there. So there's a big foray there, and there's a big initiative to build our own platforms like SASVA for software development lifecycle. That is boding well for us in terms of the customer demand generation and winning newer deals. Now, the other part of it is we have to also be our customer zero. We also have to adopt these technologies so our internal customers, our internal, folks, our employees are using them on a day-to-day basis. So we have a framework called Persistent Assist framework, whether it is our talent acquisition engine when we are hiring people, whether it is our talent management, whether it is our internal IT, whether it is our HR, every part of our business finance, we are using AI to empower our employees. And that's also leading to not just, do more with the same people, but better experiences in our own firm. So that's where it is.
Right. Mr. Kalra, thank you so much for your time early morning today. And here's hoping that we meet in Delhi soon. You're a Delhi boy, and we must do these interactions live in our studio. Thank you for your
Oh,
time, and here's wishing you all the best.
thank you.
That, ladies and gentlemen, was Mr. Sandeep Kalra at Persistent Systems, a phenomenal quarter on quarter, year on year performance by Persistent. This is one of those quality mid cap stocks that are a part of large mutual funds, whether they are flexi cap, mid cap, or small cap, and has had a phenomenal stock appreciation over the last 5 years or so, which is 73% CAGR each year. In the last 10 years, shareholders have gone richer by 33% each year. Thank you so much for your time. Please continue watching Business Today Television.
If you like the video, do like, comment, share and subscribe.